And welcome back to another episode of Zero Signal Podcast. Stu, how are you doing today?
Connor, I am good. The snow is melting here in the Northeast. I am over caffeinated, but things are good. How are things with you?
Couldn't expect to live life anyway other than over caffeinated. That's the way it's got. As a matter of fact, I've had to move entirely off of coffee and onto green tea. So specifically matcha, because the coffee was getting a little nuts.
I know years ago when you almost moved to Los Angeles that you had a little bit of LA in you, and matcha to me, like I'd rather drink dirt. They taste similarly, and I won't hit like Bridget, my wife, also drinks matcha. I'm not buying that anyone enjoys that. I get it looks good on Instagram and you feel good, but I can't believe you're drinking matcha green tea. Good for you. You're a better man than I, or worse, depending on who's judging.
It turns out there's a 20 to 35% premium on eating and drinking green things. That's why avocados are such a great market for Los Angeles.
That's it. That's it. I wonder if there's a matcha.ai. I wonder if that domain name exists. There
Probably.
has to be some company out there that are using something green for something. I'm going to check it out.
All right, we'll get there. Maybe a step up from rent to human AI. All right, mate. All right. So I really want to get a guest in today. So this is a return guest. For those who have been listening since the beginning of Black Hat, you will remember this gentleman's name. So today's guest is Mike Privette. He's the author of Return on Security and one of the clearest market analysts covering the business of cybersecurity. Mike tracks the money, the M&A, and the funding flows, the structural shifts happening in our industry, and does it without hype. His 2025 State of Cybersecurity Market Report breaks into the 25 billion of funding, the 67 billion in M&A, and the market patterns behind it all, from regional capital consolidation to what he calls the great bundling. So, if you want to understand not just where security is going, but where the capital and power is moving, this is the conversation for you. So, with that, Mike, welcome back to Zero Signal.
Thank you guys so much. I'm really excited to be back again.
So,
Is Mike our first or second return guest? I think Keith was the first
he's the most
returning
important.
guest. He is, and
I accept.
the tallest. I think, although we can't see that so much today, I think he is for sure the tallest guest we've ever had. Mike, did you ever think you'd be dubbed as like a market analyst? Because like that's what you have become. Was that the goal? Like I know we're going a little bit off script here, but is that what you thought people would view you as? Is the voice of the market?
No. To be honest, I had no expectations or no even goal to do that. I just thought, man, I've got a lot of thoughts. I like to write. Let me put them down. Maybe somebody will find them interesting. And then, it shocks the hell out of me every time I realize that people like it, like that many people like it. So I think it's cool. It's fun, but kind of byproduct of getting to do what I really enjoy doing and researching and the writing. And it's just fun to be able to share with everybody.
And I think what you have done, I think, is really powerful because you have created this entire thing that didn't exist before Mike showed up and the cybersecurity economist. And I just think that's so true how you do it because you don't speak to it like many people in a hype cycle where they're following something really niche and they're like, oh, I'm going to be really in all on Bitcoin. Okay, whatever. You do a really good job of stepping back, looking at the larger macro picture in context of cybersecurity. So this corner of the world that you have created on being the cybersecurity economist, I think is just amazing. As someone who
I
reads
would
it.
I would also stand up to say that like this could have been done by a Gartner or a bank or a VC, and that is that's a biased lens, right? Like let's be clear, right? We know like the Gartner, a very clever organization, but the wind goes where Gartner receives their money from, and that will always be the case. Like, sorry about the skeptic, Mike. You don't actually stand to gain. I know that obviously now there's been some traction and it's starting to become a little bit more monetized more from the sponsorship, but like you didn't really like it doesn't really matter which way the market is going other than like maybe you personally, but like if activity is in a certain direction, you actually stand to gain nothing, which is why I think your writing is the best. Because you are, again, going back, it is not a hype cycle that you're trying to pump because you have something to benefit, because you have an entirely non-biased lens at what is happening. You back it up with data and you write it really well. Sorry, I'm actually never nice to anybody, so I feel really uncomfortable right now. But I want to doff the proverbial cap because it is great. And I think the reason it's great is because of its kind of neutrality.
I really appreciate both of you guys. It's super. You guys said it better than I probably could have explained it myself. And very, very happy to hear all that. I think it is true. I observe the market. So I enjoy seeing where it goes. Of course, there's bias in everything you do. I do have sponsors, but that's like, hey, you just get a small spot to talk about what you want to talk about. It has nothing to do with what I write before, during, or after. And people seem to like that just because it's a way that then they can be impartial as well. And then, it's to me, it's always been fascinating how it moves, where the money goes, how often there's a disconnect between where money is flowing, what people care about on the industry side. And that to me, that disconnect was always super interesting as back in my security engineering days of I see what I'm being marketed. I know what I need, and they're not the same things. And like that to me was like a strange bridge that I didn't realize needed connecting. And I thought kind of I was the only person, maybe feeling this way and not. And then it turns out I think it's a lot broader. So I said, wow, I wonder how else, how deep does this rabbit hole go? What else moves out there? And then I just have a kind of a personal fascination with macroeconomics. And so I just try to like always observe, these large kind of patterns and it just made sense to put together.
I
So
think
with
this
that,
is, I'm going to jump in. Sorry, Connor. So I think this is a great segue into the 2025 report, because I think that link of like what we think we're seeing and where we think the money is being spent and AI, that doesn't necessarily show up like as much as we thought it would when we look at your report. So I think it's a good way to say like what we're seeing with what we think we're feeling and what is actually happening in the security market and the market at large. Like these two are conflict, right? And I think it's a great time, Connor. I think you prep for the report, but like AI spending is, in our head, it feels like 80% of security investments and 77% of NA is all to do with AI, and the numbers don't show that.
yeah, actually, Mike, you go on to say that in your 2025 report, one of the first things that came out that really struck me was if I was that only 2.6% of the funding that went in last year went directly to an AI security company. And if you walked the Gartner Symposium or Black Hat, that was not the feel of that. It wasn't, and like this AI security wasn't even in a top 10 category. Like identity, as you called out, identity alone raised 4 times the amount of capital. So what's going on here? Did we just like mislabel it? Is AI security just not a standalone market? Is it dissolving into something else? Is it kind of like the cloud market in 2015? What's your take when you looked at 2025 for AI security?
I'd say that it's actually probably column D, which is like all of the above of those things kind of mixed together. In one part, obviously, if you look at the broader tech market, there is an astronomical amount of money being spent on AI up and down like the entire value chain, from like physical spaces, physical components, all the way up to models, and then all applications built on top of that. And so you see that, and then obviously you see a lot of security being added to that or near that or on that, and a lot of companies coming out talking about AI security. But it quickly became a kind of a misnomer. Like when you say AI security, people now they think something specific, whereas early on they thought maybe 2 or 3 years ago that meant we all kind of had an idea what that meant. Like, oh, how do we secure AI models, or how do we make sure that, that what we get from AI models are secure? And then that's kind of where the market headed. And then they quickly realized that the model companies actually got quite better at that. And
Yeah.
that market kind of squeezed super tight. And there's still some, but it consolidated quickly. So then everyone pivoted to, well, then how do I do AI for security? And then that then became a small thing. So AI powered, detections, AI powered response, AI powered assessments and GRC and all these things. And then that was novel for a bit. And then that then became the default way of operating slowly. It is one of those things where it was just like the cloud movement, where you eventually, that's how you started companies. Like you started in the cloud. You didn't go to a data center or colo or any other platform. You build it directly in AWS, and then you were off with your company. Now the same thing's happening here, still building the cloud, but now to build in the cloud is to build with AI, and to do a business now is to use AI in some way. So it's no longer what I saw in 2025 that was different from the first 2 years was the shift of it was no longer a feature or like a selling point. Like nobody wanted another chatbot in
Nope.
their product. How do I make all the chat bots talk together was always the lingering question in my mind. You need some kind of chat like commander or something to go over top. But then it slowly just became the way of operating, such that I started peeling back and saying, well, okay, you might be doing privileged access management or identity governance through AI. That's really cool, and you can probably add some efficiencies and some really big step function changes. But you're actually still just doing identity. Maybe you're
Yes.
just doing it a much different and faster and better way, but it's still core identity. Because you wouldn't say, we built this platform on the cloud to solve your PAM or to solve your identity governance. You'd say, we're solving identity governance in like a SaaS model. But no one really cares about the delivery model. They care about the outcome. So that's why actually I started pulling back and saying, I'm actually going to start reclassifying things and show kind of like behind the marketing lens of like, you can still say AI, you can still say it's machine learning, you can still say all of these things, but don't say it's AI security unless you're directly securing the AI models. So I think that market has like super shrunk. The rest of it just been dissipated, or I call it absorbed into the rest of the industry, which I think is good because that just means like everyone's moving like much further and faster now using it instead of like saying that's the thing.
No, there's a point of view that like one of the core reasons that cybersecurity as an industry exists is a ballast against failings of other departments, other engineers. If the simple example being of if the engineers wrote perfect code, we wouldn't need an application security. If all your cloud configurations were unexploitable, you wouldn't have cloud security. It's not perfectly true, but it's kind of the framing of conversation. So it just sounds like what we've seen here is just because at the speed of AI, everything's going so fast. We had the AI security market that was like, oh, we're going to fix all the problems with like these frontier models and how they're adopted and all the MCP servers and all that. And then quickly the market's like, well, actually, we're just going to go fix our own deficits. And we built it out. That makes sense to me, but it was totally not apparent going into 25 that was going to happen. Some
I
people said,
agree.
I definitely think, I thought that would be
I
a bigger.
agree. I thought it'd be bigger too. The data shocked the hell out of me when I started like looking back. I'm like, oh, this is actually probably worth calling out separately, just because it's different. And especially if you look at some of the, like maybe other industry reports, all they talk about is AI security, but they're kind of missing the entirety of like what we're looking at
Yeah.
here, in my view.
Yeah, and I think like I look at most of the companies, like the obvious ones, like red teaming, right? It's still solving the same problem, but they're using AI. Like red teaming and SOC seem like the most obvious, like the ones where we see the most movement and the most talk. And some of it is just some of it's the old businesses just reinventing themselves, right? Like
Mhm.
I get that there's a lot of startups, but there's also a lot of businesses who historically have the customer base and they have to reinvent themselves. Otherwise, they'll become useless. And see a lot of domain name changes from
Yeah.
.com to .ai to really go all in on that. Whatever happened to .io that was cool a few years ago. But I'm seeing that and it is interesting. I guess like it seems easier than it's ever been to spin up a company and right now like get funding. The way that you're looking at this, like not all of these companies can win, right? Like I think like if there's 80 set, like I don't know how many SOC AI companies came out of stealth in the last 18 months, but it feels like 100. I'm sure it's less, but like that have all been VC backed. I can't see 80 something winners, particularly as the end goal now seems to be bought by one of the cyber mag 7 basically. So do you see that that's how the market's going to win, and winning is, well, that's how people are going to win, and the winning is to be one of the people selected by the bigger companies?
Yeah. Well, your number's like not actually that far off, believe it or not, the ones I'm tracking. And yeah, I think these markets are just kind of ripe, early days, and you see this with other markets as well, like where everyone's figuring out things at an incredibly fast rate, and what you market yourself as today actually can change tomorrow. And one of the most interesting, I think, and most challenging pieces of this space we're in now is that features are no longer issues. Like there is such a minimal gap between what I can deliver versus what a competitor can deliver, and how we can kind of forever leapfrog each other on that front. That now, a lot of people have just stepped back and said, well, let me just wait till this market consolidates itself, either by companies shutting down, getting bought, or turning into something else. And then I'll pick the clear winners from that kind of next iteration. Or I'll wait till one of my big, Cyber Mag 7, as you said, Sue, buys it, and they just turn it on because I already have an enterprise license agreement with this company. So there's part of that. And so there's a little bit of a natural selection happening in that space. And that's happening same thing in the AppSec space. Like there's a couple of them that are AI is kind of rapidly accelerating the pace of that subsegment of the industry. So I've said there will be winners chosen, but what cyber is interesting in the fact that there's not one fintech platform like Stripe. Like
No.
there will not be one platform. It's a market that can survive many winners, and winning now is an acquisition more so. It's not an IPO, but that's, there are certain parts of the world and certain groups who are extremely good at manufacturing acquisitionable businesses. And so that has always been the playbook for security
Yep.
for as long as I can remember. And now it's just becoming much more the norm. The acquisitions are going to happen earlier because talent and not even buying like contracts or like a regional space, just buying talent earlier to then consolidate even quicker is now like the name of the game. So yes, it's going to happen. It's going to continue to happen really fast. And then what'll shake out is, a couple pockets of clear winners in different things. And then because our industry always kind of rehashes itself, there'll be yet another new batch of things doing it again and
Yep.
again and again,
Can,
which actually makes it exciting.
can I dive into a unit economics question? I am also obsessive over unit economics because my mum was a math teacher. From what I understand, and I'm using AI stock as an example here, from what I understand, there's actually been more investment in AI stock companies than is actually attainable revenue and market share right now. Is that data that you have access to? Are you seeing something similar?
So a lot of that stuff's like very hard to come by because it involves like getting private
Understood.
revenue numbers.
Yeah.
I've heard similar rumblings. I mean, there's always a cost. Well, there's always a challenge of how do the SaaS unit economics break with AI because it's consumption based typically.
Yeah.
So the more tokens I shove in, the more money I have to pony up, and that's always been kind of a lingering fear. Well, not just in cyber, but any business that is built on top of LLMs or wrappers or any kind of like hosted model. So like a lot of companies have tried to figure out how do I go smaller? How do I do break it up into fewer segments to make it cheap? How do I do local models like that don't call back to, Anthropic or OpenAI to reduce costs? So that way, because they're having to either foot that bill, which is VC backed, or they're having to try to pass it on to their customers, which is a kind of a no go. Because like that's not how people are used to buying. Like, oh, I'll buy your SaaS product and pay us like a per usage fee. But that's much more of a managed service business model where they can then pass that you can unit economics onto their customers ultimately who just get one flat bill. So that's been a tricky push, and I think that's part of the constraint on those submarkets, like especially the SOC and the vulnerability management spaces, is because it is kind of a race to the bottom on that.
Yep.
But then the tech keeps leapfrogging and making and what's possible becomes cheaper. So it's kind of interesting. But once you abstract that away, in my view, you realize that like you're kind of fighting the wrong battle if you're thinking about cost the whole time. Like that's not what people are buying it for. But if you make it a problem, they won't buy it for sure. That makes sense.
So actually, I want to extend on this a little bit, continue that thought, because there has to be a way, somebody somewhere has to have a hypothesis that the investment into these technologies that are very human heavy at the moment is going
Mhm.
to pay off. So I actually wanted to get your take on MSPs, MSSPs as we think to the next year, because in your 2025 report, you had this outlook, this prediction for the year that's coming here. And you wrote along those lines that service economy is going to overtake product innovation. And you said that 47% of the 2025 M&A deals were services companies, MSSPs, MSPs, consultancies that are being rolled up by private equity. And you make this argument, which I think is totally salient and I agree with, is that the market is moving away from buying tools to buying outcomes. I actually just gave a keynote last week, and my whole thing was like outcomes are the only thing that matter. But this is yeah, so I agree with that. And you said like the largest exits next year are likely going to come from service platforms rather than product vendors. Do you think like as Stu raised up about the socks, that like is the world going to be like just reimagining MDRs and MSSPs, and that's where we're going to see disruption, and that's how we get the return on capital? Or or is it still just enterprises buying the next version of a SOAR platform?
Yeah. So I think it's going to be some of both because like enterprises will always do enterprise things. Like they'll always buy big products. There's often not one set of MSSPs that can handle such a large organization. But things are changing rapidly in what's possible to do through a service business. So like MSSPs and MDRs and the likes are always worried about human economics. So how many people do I need to staff on this one customer to make the job profitable, but not like over expensive? And as AI can kind of come into this, so they can have more people using AI led things to manage scale, to do things faster, to pull reports that would have taken like, hours or weeks for people to do across multiple customers, they can now plug in qual code and have it go do it. So there's an entire shift of thinking of what is possible to be delivered for a service business, which means now the economics or the kind of like cash flow of an services business can be a lot more attractive to traditional VC investors because you can actually then plan it out a little bit better of like, hey, look how much I can scale with this, and given this much more investment, I can go to market and get this many more customers, and I can service them in like a very cheap kind of effective way. And I think that's just going to keep pushing. But if you look at like some of the largest consultancies, like the Accentures of the world and Cognizant and the likes, I mean, they've been on an incredible buying spree for these like
Hmm.
services companies and like little product companies. But they're basically just acquiring these service capabilities that they can then give out to everybody. And if there's any one group of people outside of like private equity who's won the most on like AI so far, it's those large consultancies because it's the last mile problem, which is what gives you the outcome. So like I need to know what to do, and then I need bodies to go do it because institutional inertia. I can't get out of my own way, and I can't be the change agent from the inside out. A lot of times, especially in large companies. So what do? You bring in loan staff or like somebody from Accenture or EY and have them run it, have them run the whole playbook end to end. And then you've also got one throat to choke from a business standpoint to say, well, if they mess it up, well, it's kind of on them. So it's I think that's but what's possible now? Like, hey, it's not just a 200-page slide deck I get anymore and then that would be $1 million, please. It'll be, hey, here's a much smaller slide deck and a JSON file and a way to get going on this, and let's get moving. We can get your role and plugged into our systems like immediately. So yeah, the whole concept of what a serviceable outcome is, I think is rapidly changing.
What I find fascinating about that is like the engineering purists feel the like complete opposite of like, hey, well, we'll never have to call consulting again.
Yeah,
And the truth is, right, like businesses and people are still very insecure about this, and they still don't really have the confidence. And candidly, like I say this a lot, I think a lot of CISOs are overplaying their hand in terms of really what their actual overall knowledge is of where we are and what's happening right now, because they're the duck right now. They might seem calm on the surface, but those legs are paddling away. But it is like fascinating to hear. And I also think like I love the difference between private equity money and VC money, because I find that VC money, like I always look at the terms of like private equity always gets on base. They always win. VCs hit home runs and they swing hard, but they miss a lot more than they hit. And I think like for me, if we're tracking the money, like, private equity probably have 80 and 90% hit rate, and they kind of like they'll find a way, right? And sometimes it's pretty damn ugly, but they'll find a way. I think right now, like there is a VC, like not all money is like the best and sharpest money. There is a little bit of VC FOMO right now. And
Mhm.
you hear the stories out of Silicon Valley that this is the last run. I don't buy that, but they feel that this is the last run to hit their proverbial home run and get generational wealth is all the talk of Silicon Valley. I don't buy it personally, but it is interesting, like some of the roulette wheel they're spinning on some of these companies that maybe don't have the traditional metrics that people would invest on, and private equity wouldn't look at this business.
Yeah.
Do you track like success rates of VE versus VE? That's not a thing. VC versus PE backed companies?
yeah. I mean, I try to track them all, and I also track kind of like the exit rate of like whether it's a strategic company buying it or a PE buying, and it's
Yeah.
basically 50-50 in
Okay.
the market. It was the past few years. They're typically what's the most interesting play right now is a PE firm buying a large MSSP who then goes buys a bunch of other MSSPs, or they might go buy products.
Yeah.
And so there's always kind of roll ups happening in that front. And it's if you think about kind of build on your analogy about like the home runs and stuff, like I heard this recently that I can't take credit for, but I think it's pretty interesting. If you're a VC, you're optimistic, but if you're like hedge fund and like the private and public markets, you're pessimistic. So you
100%.
expect things to go bad. I'm going to capitalize on the bad. The VC is like, I don't think all things are going to go good, but man, if this one does go good, it's going to be the best. And so like you're hoping for that best outcome. So you have the forces at play there, and it just shows you the kind of the difference between private and public markets. But yeah, it's hard to say definitively who has the best outcome because like
Yeah.
obviously raising money doesn't mean success. And even going public doesn't mean success because then you're
No.
tied to the share price.
Look at Figma, right? Like that is
Right.
that's the most painful 6-month earnout I've ever seen. Like it was
Yeah.
down 86% on the exact day they could click cash out, and that was a tough one to watch. So you're right, ringing the bell. Other than for maybe other than the bankers who are fine with it, like there's
Yeah.
not always winners.
No. And Adobe has the chance to do the funniest thing possible right now. They're making another bid.
Don't. Yeah, I'm
But
sure
yeah,
they
it's
probably feel quite validated, to be honest, that they got out. Like that's the least buyer's remorse I think you'll ever see.
So I want to keep down this theme of like the M&A space here because you got some really good data about this as well. And when I was looking over the report, some of the data that stood out for me was that there was as I said at the intro, $67 billion in M&A. But as you were just describing there, like the relationships of who's buying who and how the mechanics is working is also really interesting. So you're starting to call this the great bundling era. I was hoping you can expand on that because when you see like ServiceNow buying Armis or Palo Alto buying Chronosphere or ServiceNow buying Visa, these aren't just like cybersecurity companies like buying other cybersecurity companies. This is like IT buying security or security buying observability or manufacturing entering into the cybersecurity space. Like it's really interesting moment for who's buying who and why. So one of the questions I want to ask you is, do you think that there is something happening here where the boundaries of the cybersecurity market are starting to dissolve as a standalone category and the market's just looking at this as like a technology or IT problem? Or Leah, can we expand on what you meant by the bundling service? And then what is your take on the future for cybersecurity over the next coming years?
Yeah, so I think the lines of what is in the scope of security has kind of been slowly evolving for a little while now. So you've probably seen this too at the hiring level as well. Like what people's remit is like slowly creeping, up and up or wide or
Yeah.
sideways, especially in like IT OT space.
Yeah.
The skills at which people are needed in these spaces are expanding out because if it's a part of a business or if it's part of technology, well, there's always going to be some security component to it because security is both the vertical and horizontal, and like circle if you want to like just nail it in, but
We're
like
all the shapes. We're all
A
the shapes.
all,
triangle and a rhombus.
all the
It's a
yeah.
rhombus.
Yes, cube and a cone and a pyramid, and it's like, uh, but it's so there's obviously that like there's always this need for it. Something like observability, where Palo Alto bought Chronosphere was very interesting because observability is not a new field, but it's been out for a long time and traditionally in the application performance space, and it's things that are very important for businesses, but they have slowly become more signal for security intelligence, and then enter AI and agents, and they produce more telemetry or log data than anything we've seen before. So you need to observe it, and also you need to secure it. So and you've seen some of these large cyber specialists. So I also track like kind of like VCs at the fund level and like their thesis and like were they true or not to what their stated thesis was, and what else do they venture into? Many of them have been going who were predominantly cyber have been started going data and cyber or AI and data and cyber, and so they've been branching out for a while because there's always kind of like at the very least a good cross sell play, but it's a convergence bet that these things will become together important. And if you look at probably the most public example of like success on this is like a Datadog that has like all of it kind of under house. So they kind of do it all. But then like that big acquisition was like, okay, cyber is officially in observability. People want that now. But then you also got a whole new set of buyers to pick from. So now you can talk to the CIO, the CTO, the chief data officer, chief AI officer. You can really expand. So I think there's obviously like capitalistic side of like it just makes sense to expand out from that stuff. And then you see a lot of businesses like the ServiceNow one was especially interesting to me because they're already a part of the way that IT does business. Like you work through ServiceNow. That
Yeah.
is the end all be all of where things start, stop, and continue. And so they've been on a security tear for a very long time to try to figure out how do you inject security operations into that as well, which has traditionally kind of been like a separate thing. Like security does their own thing, IT does their own thing, and sometimes they talk. And getting firmly in that space lets them have like a much more holistic view from like an IT perspective, like what is available, what needs governance, what needs identity. There's that piece of just people are seeing very profitable revenue streams. Like I think 2 years ago, Microsoft security business was like 20 billion alone, and so like there is money on the proverbial table for people to take on that space, and it's much easier to sell to customers you already have as opposed to acquiring new ones. Like so that's part of it, and then I think other industries are just realizing, hey, we need depth in this space too. It's not just enough to sell IoT. We have to make IoT secure from the beginning, or sell services with it to make it also secure. And so I think we'll just see more of that coming. And the bundling comes in like the great one stop shop. Basically,
Yeah.
hey, you come here, you buy your IT, you buy your services, you buy your security, and we can do it all for you. I think there will be many like this, and nobody will buy it from just one. I think JP Morgan Chase put out like their kind of tier one tech stack for cyber a couple days
Yeah.
ago. It was all every big name player, and across every industry because they're such a large company. So they they have to collect them all like Pokemon. But So I think that need will never go away at that stage. But I think it'll allow more of these kind of like observability adjacent or like governance adjacent type things to then enter into security mindset. People will because there's a lot of great things that people have done outside of security that have incredible applications inside of security, like disciplines and kind of already solve problems with data. I personally think security is having an incredible challenge with data engineering right now. Like
Mhm.
they've long had a data problem, and now they have way too much data and they aren't data engineers. And so there'll be an entire wave of companies who are helping security teams solve that problem for them. So that's
Mhm.
another opportunity right in the space where these kind of big IT players are already at.
Yeah. It's interesting because we had Carl Mattson on the podcast. Oh, I think he may even was straight after you when he talked about this, right? Like, you do not need to tell your sales team to compete with the other Series A business across the street in Israel or in San Francisco, whatever it is. You have to outsell Microsoft and get the business to decide to go with you instead of Microsoft or Palo Alto or whoever it's going to be. And that's the challenge, right? Is going back to it. Like, if Microsoft, quote unquote, can do it all, like, again, maybe in certain very single use cases and like a highly sophisticated buyer. But we have to be pragmatic that like 90% of people, 97% of businesses, cybersecurity challenges have very limited budget, have very limited like
Yes.
bandwidth to over engineer things. And sometimes it is just easier and then just to call Accenture and bring the thing home. Accenture and Microsoft did pretty hand in hand. So it is interesting. I wanted to kind of stay on the M&A piece because it's 90% of what we're going to talk about today anyway. I guess like from an innovation standpoint, do you think like, and I don't really have eyes on this, but like, is it worth it for a business like Palo Alto or Microsoft or, Google to really be innovating from within? Or are they just, are we in pharmaceutical land right now where it's like another business creates the drug and we buy the drug in the customer base, and at home base we're Pfizer and we keep pushing the pills and that's what we do and we'll just buy innovation? Like, is again, maybe you have a better insight into that.
Well, I think some of the companies are at that stage. Yeah, they're buying more so. I mean, CrowdStrike also went on a huge
Yeah.
acquisition spree. When you're so big, you do want to buy market share. You do want to buy just obviously talent, and there's a premium for talent, especially when you made it that far. And it's actually becoming a much earlier stage thing. So now companies are kind of it's less like let me buy a fully formed business that has lots of revenue, and it's more I need to buy what this team could make, and
Yes.
or with or without the technology we bought, like we need to kind of like circumvent around what the next kind of wave is. So I think that'll definitely be true for the biggest ones, and some of them, the biggest ones, these hyperscalers, even their core businesses are like kind of like much either higher or lower up on the stack. For like Google, like I mean, they're crushing it with AI things now. Finally, they should have been winning all along, but like they finally caught up as the original ones. But now it's compounded. So now they just want to accelerate that, and if they can get a security story with that, that sounds good. But like they will always make a lot more money from their core business offerings.
Google.
Same with Microsoft, and so it's you know I think the big cyber companies can do the same thing. People will always come for the flagship offering of whatever it is, whether it's network security, cloud security, EDR, and then they'll stay for the other things that you help them integrate through the rest of their stack. I think that is kind of the late stage capitalism game. Is how do you continue to keep the stock price up and keep expanding margin and all that stuff, and then you're playing the final game in that stage.
So it's interesting. So you're talking about the acquisitions side of the house. And I think it's really interesting. Like we talk about the acquisitions, but like the traditional metric is like 70% of acquisitions don't return the value that's expected. Part of that, I think, has to do with like when that rule of thumb came around where you were acquiring much later stage companies. So maybe it's more advantageous now. So I'd be interested to see next year, like all these acquisitions happen this year. Like, did they actually get integrated? Are they actually sharing their data plane, or is it just like behind one logo? That'll be an interesting thing to look at
Yeah.
for us going next year. So I'd love to get your take on that. But also, one of the things you also started talking about in your newsletter, in this particular year's report, was you started tracking companies that are dying, that are failing, that are going out. It's like Skyblocks and some names that I had heard like over the years in industry. What drew you to start tracking the graveyard? Why do we have a registry of the graveyard now?
Yeah, I thought it occurred to me after I saw one or two, and I'm like, well, I should probably track that because I wonder how much money they raised, or wonder if what the circumstances were. And I think it was one company that effectively had a flash sale and just sold all their assets and IP to another company. and just closed up shop. And I was like, that's extremely,
I think it was
harsh.
Scriblocks to Tufin. Yeah, the
Yeah,
networks.
that one surprised me, and I'm like, well, I should probably research what other ones are doing. And if I'm trying to track the economy of cyber in general, I should probably track the lows as well as the highs. And so that's why I tracked layoffs as well. And just sort of, it's like, hey, I should add shutdowns. There should be a small list, at least publicly. There's so many companies that are just kind of zombies that kind of never really shut down, but never really get product market fit and real traction either, and just kind of like slowly live on until the company either returns some capital or like the founders go elsewhere or get acqui-hired by something. So it's those are obviously harder to find, but I'm like, well, I should at least capture like the big ones just so I can paint a better picture. And I'm kind of a more data is better so a person, so I can I'd probably go overboard on that, but like it helps me like paint a better picture of like where are we at.
So I want to zoom way out for a second. I don't want to get like because we're right here in the middle of cybersecurity land. So I want to get up at the level of economic policy of the nation state. So one thing that caught my eye when I was reading the report was you showed that there's like this geographical shift on where funding is going in cyber, where US to US funding jumped 125% from 5.9 billion in 23 to 13.3 billion in 25. You also showed that European investors dramatically shifted homeward, and the intra-European investment was up 209%. And this cross-Atlantic flow kind of remained flat, but when there was more money coming in, it stayed local. So then I was like, reading through, and I was like, okay. So then we started looking at the acquisitions and the exits, where the US and Israel absorbed 91% of all the global cybersecurity funding and 68% of the deals. So when I start looking at that, I start to think about like regional consolidation instead of globalization. So I wanted to get your view on am I reading that data correctly? And so does cybersecurity start to look less like a global technology category, more like a national industrial strategy? And so if you agree with the premise of how I'm looking at your data, what should countries do who are not the US, who are not Israel, to start building a cybersecurity capability within its own borders?
Yeah, so I do agree with your take too, and like, so I'm in the UK, and so I have an interesting view from the outside of the US, but then I also get to observe what's happening in the UK and Europe. And it was interesting to see kind of how not only like political policies but like monetary and fiscal policies kind of shaped what nations did or didn't do and how they chose to invest money and what deals they struck with imports and exports. And I just had this hunch that I'm like, I bet money is starting to change hands because sentiment is changing. What people are saying is different than what they used to say. I kind of on all parts, and so I thought, well, I should probably just track like this level of investment. I was not surprised by the U.S., but I was surprised by lots of other people. But it kind of showed that some countries are not just making or just saying things for Twitter and saying cool statements. They're actually changing where they spend money and how they incentivize people. It's also the regionalization thing is happening, but I think it's so we're in the early days of this, right? Because the U.S. is the largest market for anything,
Yeah.
and then it's the largest cyber market still. So what I've noticed that changes where companies may have initially, even if they had a set of founders from another country who may have chosen to go to the U.S. to start their business, they said, actually, I'm going to stay local for a little while. Then I'm going to see what I can do here. I'm going to base here, build there. I'm going to do like a 2 continent strategy for engineering here, sales there, and do it a bit differently, which is not something I had seen, and that's not really something I didn't talk about when I moved here a few years ago. And so I think there's a bit of local, kind of regional and national pride growing for people. People say, well, hey, in one hand, some countries are like, hey, we don't want to be stuck with only US options. So why don't we build the European option or build the UK option? And then couple that with people saying, yeah, the founders, I want to do that. And then you have VCs popping up saying, well, okay, let's start this at the at the smallest stages. And it's kind of the early forming of some of these ecosystems that have always some of them have always been there, but they might have done more American investments than local investments. And so now they're starting to switch a bit more. Some are looking more predominantly just in not just in their country, but like in the European Union area to try to build up that kind of the local base. I think we'll see more of that. But then you have to juxtapose that with the fact that like you can't ignore the largest population of people to sell to like forever. And people care about different things in different countries. And so that there will be ultimately a struggle. Can country or continent like geopolitics and the way they treat founders and investors change with the times? What people want? Will they be able to keep up, or will people be forced to kind of go back to the same routes they had before, but maybe by a little bit of a different direction. But I do think we'll continue to see more of that in some places. I think others will kind of like just dwindle down and maybe not build up what they could have done had they had a closer partnership with other countries, and then some just kind of will like disappear totally. They'll just not start the company there. They'll go somewhere
Yeah.
else.
What this is an interesting question. I think about this a lot. Like, what do you think happens to the cyber startup ecosystem when Anthropic and OpenAI and Google really start to monetize their models because
Mhm.
they can't go on? Like, how reliant do you think today's industry is on their access to, say, Claude credits? And what does a 4 times price increase so that Dario can turn it into a profit machine? Like, what
Yeah.
impact does that have on early stage products?
Well, I think so. If you are in the chambers, like echo chambers we're in, and on Twitter and stuff, like it's 100% of the people use all this all the time. But if you kind of zoom out and like talk to like somebody who's not in tech as deep as we might be, they're not even remotely thinking about this at all.
Yeah,
You could also argue that maybe their job gets replaced in some form or fashion by that. I personally think we're extremely early on in that real thing because
yeah,
as amazing as Claude Code is and the others, you have the kind of implementation and orchestration and visibility angle that is still not there through a lot of these things. Yes, you can get things done through the different, spreadsheets and Slack and Claude for work and things like that. But then, a lot of what security products have been super successful about and what people love them is that they have a way to surface risk in ways they didn't know that they needed to see that they've always had, and they didn't realize that this particular slice of a risk was allowing them to like see where the true risks are and like reduce like vulnerabilities and things like that. And so I think unless they get into the full scale, SaaS or apps game, I don't know that they'll completely replace them, and there will always be a place like for similar. It's not quite the same, but it's similar to AWS has lots of security stuff, but then there are hundreds of cloud security companies that sit right on top and do a better job natively what people like than what you can do in AWS. So you'll still have that preference of like, well, hey, I just want to go straight with an IDE on code, or I really like having the visual overlay and the reporting functions. You will find the builders who are like, hey, actually, I want to design my own dashboards and pipelines from scratch with Cloud Code and just feed the security data into it. And some will say that's way too much to keep up overhead. I don't want to become app dev team. I don't want to run my own database. I don't want to do these things. And so you'll have a bifurcation of that. And like you can't always take your cues from the tech heavy companies because they will always do something cool. They'll always do something tech and building, and we'll hear about them and like B sides and think, oh, it's amazing. I can't wait to do that at my bank, my community bank. It's not going to work.
yeah,
You'll never get there. It'll be just a fun thing you talk about on the side. So it will not be adopted evenly. Like like the old saying, like the future's already here. It's just not evenly distributed. And so it's like I think for some they may not adopt that, and so that means someone's supposed to serve that very large base in my mind. So that's why I keep thinking I'm a huge AI proponent, but I think we're still incredibly early on some of these things.
You said something else is really important there. It's just like this difference between those who want to be right at the bleeding edge and let's say the rest of humanity. And there is this adoption curve, right? You go back to the crossing the chasm from 15 years ago. And I bet a lot of the thought leadership as you expect comes from like the tip of the spear. It's that first 15% of the market. And there's a lot of iteration happening there. There's a lot of thinking, but actually what's going to build your security, like what's really going to win at these enterprise scales are platforms with opinions. How that looks is changing. No doubt about that. How we interact with these challenges, but like actually having reporting, having dashboards, having workflows. I tell my product team all the time, it's like a dashboard tell a story and your platform should have an opinion. You should like if you are an analyst and you're engaging with a cybersecurity product, the product should help you be a better version of your job. Like it should take the world's best practices and put them in there. And you don't necessarily get that with a raw LL. But it looks different. Now Claude Opus can read open source code and find 500, validated vulnerabilities that no one else can find by reasoning differently. I'm like, so there's definitely like a lot of change happening here, but yeah, we are early. And I said this the other week in the podcast. I'm like, we are earlier than we think we are, and the change is going to be bigger than we think it is.
Yeah, I
And they're
agree with
both
that too. And if you're not still like experimenting with it and playing with it, then you're later than you think you are. To like round that out, like you have to be near it. You have to be checking checking these things out. It's amazing that it can find these vulnerabilities, but then you have to put context to like, well, were they 500 vulnerabilities that I would patch? Would they lead to actual exploitation? Like there's still that kind of couple steps that are not specific to your own environment yet, that products companies still have to fill and are much better equipped right now to fill. But you have to be close to it. You can't just ignore it and expect like, your IT team to deliver it.
All right. So Mike, it has been an absolute pleasure for you coming on the show. Thank you so much for coming on for a second time. Really love it. So, for everyone who's been listening to today's show, I just want to say thank you for tuning in with us. Please, after this, jump over to Mike Privette's platform, which is Return on Security. Download, read the report, sign up for the newsletter. I read it, it's excellent. We'll make sure it's linked in the show notes. And again, Mike is the author of the Return on Security newsletter, the cybersecurity economist. Mike, thank you so much for joining the show today.
Yeah, thank you guys so much for having me again.
Thank you, Mike.
Take care.